With the exit polls predicting a BJP win, the Modi bulls have helped push the rupee higher as well. The currency surged to an intraday high of 59.59 today to the greenback, and it is the best level in last 10 months on the rupee. The rupee, which has been reaching this high every day this week, has finally managed to maintain that level at the closing as well. The rupee on your screens now, 59.68 is where we have seen it shut shop, more than 0.5% of a gain coming in for the currency today. Vijay, what's your take now? Because we seem to have really tided over that 60 mark.
Absolutely, Manisha. And like I've been saying, in case the appreciation was to occur in the rupee, it will be limited to 58 or 58.5. Now, the catch-22 situation is, would you rather let emotions run out and impact prices and thereby appreciate the rupee substantially from here, thereby hampering exports? Or would you rather let the rupee meander around 58, 58.5, not appreciate too much from there, log in a solid export performance, let the inflows thereby start to strengthen the rupee? My guess is appreciating beyond 58 is likely to be a very, very tough affair. I would seek buy opportunities on the USD INR if at all I was to see prices of 58, 58.25 in the prompt month futures.
Let's also get in a view from Stephen Hofer, who's emerging markets economist at Bank Julius Baer, and he joins us with his expert take as well. Stephen, hi. What's your sense really coming in for the currency markets right now? After hitting the lows of October 2013, the dollar index has recently risen back. What is leading to such high volatile moves?
Well, we have, of course, a new Federal Reserve under Janet Yellen, and so I think to some extent the market is trying to sort of gauge, whether there are going to be any sort of further, policy changes or, things like the pace of tapering could be adjusted and so on. But really very broadly speaking, I think there's a number of other issues out there which have sort of increased the volatility on the margin. We can talk about geopolitics. So, for example, certainly things like the events in the Ukraine, and perhaps more recently, to a much lesser extent, what's been happening between Vietnam and China.
Stephen, the rupee is trading at a 10-month highs today. How do you see the rupee performing given the exit polls and final election outcome ahead?
It's certainly true that the equity market in India has been leading the currency, so the currency is more or less stable. Fundamentally, we think that the currency, the Indian rupee, can certainly move stronger, but we do have to at the same time recognize this legacy of very high core inflation in India, which will actually sort of perhaps dampen the pace by which the rupee can get stronger. Now, fair value certainly is stronger. It's higher than where it is today, but in all likelihood, other Indian assets will be rallying faster and sooner compared to the currency.
Overall, Stephen, how would you look at the various fundamentals as we see it? The CPI data has come in higher, monsoon concerns are there, the growth is still on the lower side. How do you see the next government tackling it all?
Well, this, of course, is a very serious issue. So in the very latest data release, we have some structural elements, but also some cyclical elements, things like weather, as you mentioned. The main issue here is to relieve the bottlenecks that exist in the Indian economy and raise efficiency. And this goes to in terms of what the government can do, is to sort of speed up that process to get projects approved. That is a very clear objective. And if that happens, then we will get that sort of supply side response that will ease inflation concerns or inflation expectations in India into the medium term.
Fair point that, Stephen. Thank you so much for joining us with your sense on the Indian rupee and the economy as well. Let's also get in a word from Dhiren Sareen, Director Technical Strategy at Barclays, who joins us from London with his quick take on the road ahead for the rupee.
We're bullish on the rupee overall, and let's cast our mind to why. And one of the reasons here is EM bonds. Now, in this period of low FX volatility, which we've seen before, we've often seen a pickup in EM bonds, and there's a very strong correlation between these two phenomena. For EM bonds, the more the market looks to buy them, the better it is for a lot of these EM currencies that these bonds are denominated in. So, to that effect, with the Indian swap rates falling, 50 basis points over the last couple of months, it suggests that there's still a bid for bonds here, and the INR should remain pretty well supported. Our targets are towards 58.60, 58.90 area, so a little bit lower in dollar dollar INR. What's key for us is that this week, as long as 60 spot 40 area caps, this trend still does remain lower for dollar INR.
All right, so that's the view really coming in from Barclays and Julius Baer as well, and both these gentlemen have been bullish for the currency, looking at some supports as we go forward as well. Vijay, a bit of a pressure really could have been coming in from the dollar index today, because we have regained above 80, 0.25% up in the European markets right now. Do you see the gains in dollar continuing?
I think so, yes, Manisha. I think the dollar is poised for some recovery. And with that, you're likely to see the dollar index go up to 80.35, if not 80.47. And at this point in time, as we speak, the 79.88 is a near-term support. I would expect a stronger dollar in the coming couple of trading sessions.
Vijay, we have seen declines in the other currencies. Take a look at the Japanese yen, and that one is trading at a 1-week lows versus the dollar. Euro is trading at a 1-month lows versus the dollar. Only the correction or the gains have continued for the commodity currencies like Canadian dollar, Australian dollar. Those are trading on a firmer note. But otherwise, many of the high yieldings are on the lower side.
You're right, Manisha. And in the coming few trading sessions, I think the dollar is likely to shine and gain some traction against both the euro and the JPY. So, which is why I think that 80.35 to 80.47 is likely on the USD index. I would correlate that with the USD INR also and say in the prompt month future, if I was to get the May month futures on the NSE at 59.25 odd levels, I would go out and seek buy opportunities on the USD INR as well.
Vijay, what is your sense again coming in for the currency? While we've heard you say that 58 is the level, you do not see the rupee breaching, but markets really are working with some kind of a euphoria right now. The all-time highs in equity markets, the FI inflows, also the strength coming in from other Asian currencies. The Chinese data has been positive as well.
You're right, Manisha, but then letting sentiments prevail over sage economics is not something that I would expect that to happen, because if you appreciate past the 58 levels, you're losing export competence. And if export competence is lost, I think there would be further pressure on the economy, which I think the RBI recognizes. At around 58, I would expect the USD INR to stabilize. And possibly once the export proceeds start to come in over the next couple of months, then of course a natural inflow-led, export performance inflow-led strength can accrue, which is healthier than just talking the rupee up at this point in time.
Fair point that. And in the meanwhile, after 0.25% of gains in the previous week, rupee is more than 0.5% up for this week as well till time. Keep a watch on that, but with that, it's wrap on hot commodities.